Hi, this is Calvin here. Welcome to this week's latest edition of Weekly Technical Outlook on the major stock indices, where I'll cover the latest key levels to watch and the trend buyers for the SPX 500, the Nasdaq 100, the Hong Kong 50, the Japan 225, and the German 30 index for the week of 7th of June to 11th of June 2021. So before we start, let's take a look at the disclaimer slides first. All right, so let's take a quick glance through last week performance on the major stock indices across the globe, which is for the week of 31st of May to 4th of June, compare its prior week and the prior 4-week average. Okay, so as you could see, all positive on the major US stock indices from the S&P 500, the Nasdaq 100, the Dow Jones Industrial Average, as well as the Russell 2000 indices. So you could see 0.61% to 0.77%, slightly below prior week, last prior week of performance, but still above the prior 4-week average for all of them. All right. So what we could see over here is that I would say that momentum or upside momentum remains pretty intact for the US major stock indices. So for Hang Seng Index, it went down lower, slightly lower for last week, 0.71% versus its prior week performance of 2.34% and the prior 4-week average at 0.36%. One thing positive for the China big tech stocks, which is represented by the Hang Seng Tech Index, which comprises of, as we know, there's Tencent, JD.com, Alibaba, Baidu, positive 1.73%. So I believe that this is the kind of a first kind of a pretty much robust weekly performance on the Hang Seng Tech Index, not seen in the last 6 or 7 weeks ago. Yeah, so yes, surpassed last prior week, its prior week weekly performance at negative 0.4 negative 0.84%, pardon me, and the prior 4-week average at negative 0.99%. Nothing much similar on the Nikkei 225, slightly lower, kind of a more like a consolidation week for last week after its prior week stellar performance of 2.94%, and it's almost the same as its prior 4-week average at 0.33%. So last week actually kind of a minor loss at negative 0.71%, negative 0.71%, right? Pardon me. So very strong push up for the German 30 index to make actually fresh all-time high, positive 1.11% for last week. And what we could see now is very strong surpass prior week performance at 0.53% and its prior 4-week average at 0.63% on the German DAX. All right. So now let's quickly have a quick glance through the performance of last week performance on the 11 key S&P sectors. Okay, so still very strong on the energy sector, which is part of this ongoing cyclical and inflationary team play that is still in the market for our Q2 team plate. All right, so very strong for the energy sector as plus 6.7 plus 6.75%. So what's positive is that previous laggard, the information technology has started to play a bit of catch up, which is actually good for the overall market. Why? Because we know that information technology sector, or I would say those tech stocks form a key significant composite or a significant weightage on the S&P 500 index. All right. So definitely we want some kind of catch-up play on the information technology to maintain the overall bullish biasness on the US major stock indices, which actually translate to also this ongoing positive feedback loop into the global stock indices as well. All right, so financials not too bad, plus 1.24%. Then we stretch it out to 1 month. It's a rolling 1 month till 4th of June. So pretty much the same. Energy still the top performer at plus 8.72%, and we start to see a bit of catch up. Previously it was negative for the information technology, now at plus 2.27%. All right, 2.27%. Yes. So now Some notable key economic data releases as well as notable company announcement for this week. As you all know that the US Q1 earnings season is coming to a wrap, I would say close to about 98% or 99% of the S&P 500 composite stocks has already reported their earnings. So not much of a key US earning announcement that we are expecting this week and also going forward in the next couple of weeks. So I included some key economic data to watch for this week. Oops, sorry. So will be definitely the Bank of China interest rate decision. Part of it, Bank of Canada. Okay. Okay, before I talk about Bank of Canada, we have Japan Q1 GDP number, final number coming in at Tuesday. Then most importantly, we have China inflation data and producer price index, which is for May, out on Wednesday. Then BOC is, pardon me, is Bank of Canada interest rate decision. So do keep a close watch on the policy statement from Bank of Canada because they are the first major central bank to actually starts to actually give a hint or in fact started tempering on their QE quantitative easing program. Then you have ECB next on Thursday, then followed by the press conference at 8:30 p.m. on Thursday as well. All these are Singapore timing, pardon me, Singapore timing. Then US inflationary rate for May definitely is a key number to watch for those inflationary hawks in that's monitoring the U.S. situation. Because why? Because for U.S. central bank, the Fed, especially Fed Powell, he still believes that the ongoing global commodity prices increase is more temporary in nature, which actually translate to what I call a one-time off overheat in U.S. inflation rate, and which should actually starts to go back to normalization in the second half or in the early part of next year. So do keep a close eye on how this U.S. inflationary rate data comes out for the month of May on Thursday. Then thereafter you have for the weekend with the G7 Leaders Summit from Friday to Sunday. Then for companies wise, you have Apple, the usual annual worldwide developers conference, which is actually today. So it should be around 1 to 2 a.m. Singapore time. All right. So on Monday, right? This today, yeah. So it's actually more or less is telling about what are the new upcoming Apple product that we could actually keep a look, a close eye watch to. Then definitely one of the meme stock or meme stock they call it, GameStop. Q1 earnings for those who are interested to actually monitor this Reddit, one of the popular Reddit stocks. It'll be Wednesday after the close of the US stock market. Okay. Now, moving on. Okay, so I've covered, I'll give a video walkthrough on some of the key interesting stats as well as key economic data to watch and two notable company announcement for this week. So now let's jump into the greater detail on the key technical charts that I want to highlight for this week on the major stock indices. All right. Okay, so let me start off with the one of the risk proxy, global risk proxy, which is the semiconductor ETF, which comprises, it's actually a broad-based ETF. It comprises 30 US major semiconductor stocks. So it actually gives us a kind of a good gauge on the health of the semiconductor industry, because you all know that semiconductor industry right now is actually having this kind of supply crunch. But nevertheless, right, if we start to see prices of sentiment of this semiconductor stocks or ETF starts to actually rise, it's actually good in terms of risk proxy. That means we're talking about risk appetite is still pretty much robust in the markets, which actually support risk behavior activity, which actually translate to potential further upside movement, at least in the medium term. We talk about multi-week perspective for the global stock indices. So for sure, after a bit of scare, where it actually tumbled below in this part of middle part of May this year, below this ascending channel support, which is actually depicting this major ongoing uptrend phase that is still in place since 18th of March 2020 low. Yeah, even though it break below this ascending channel support, but it managed to help above the 200-day moving average and as well as the key support that I highlighted way back earlier for a couple of weeks back, which is 392.50. And also the it represents a kind of a corresponding support, significant support on the RSI level, which is at the 43% mark and 37% mark. Okay, so for sure, a couple of weeks ago, we talked about 1 or 2 week backs, it start to shape this bullish reversal, and for sure last week it actually very clearly reintegrate back above the ascending channel support by very strong bullish candlestick All right, and also surpass back this level, which is the former swing low area, turns into a resistance at 42360 with the RSI breaking above this former descending trend line resistance as well, and now holding above the 50% level. So pretty much strong momentum, I would say, at least on the medium term. Okay, so medium term, we're talking about from a multi-week perspective. So I'm still expecting further potential higher high on this semiconductor index as long as 392.50 key support holds. Okay, the next resistance to watch will be at 458. 458 followed by 495 level, which is the top of the ascending channel, and a key Fibonacci expansion level as well. So overall, pretty positive element on the semiconductor stocks ETF, which actually supports our ongoing medium-term bullish bias view on the global stock indices that I covered usually in my weekly technical outlook. Okay, now, moving on next will be the SPX 500. So let's start with the daily chart first to see whether is there any signs of exhaustion. No signs of exhaustion. Last week trading pretty much flattish range, but holding a pretty much flat for last week, but holding above the 50-day moving average. We start to see a series of higher low, which is positive. That means every time prices come down, there was pretty much of a support that is actually coming into the market to have this kind of buy on dips mentality. So no clear signs of a bullish or a bullish exhaustion. That means no topish sign on the daily chart on the or the daily chart of the SPX 500 holding above the 50-day moving average, and as well as the ascending channel support that is still in place, that is for this ongoing major uptrend phase that is still intact since 23rd of March 2020 low. All right. So right now, perhaps this week we could start to see a potential new all-time high, yeah, surpassing above the current high. That is 4244. Yeah, let me check. Yeah, 4244 printed on 10th of May. Okay, pretty much promising by last Friday's push up. All right, last Friday push up right at the right below the 50-day moving average and right at exactly at the ascending channel support level. All right. So strategy wise, let's go on for the 4-hour chart. So 4-hour chart pretty much unchanged. Last week as 450 as my key medium term pivotal support. So I do not want to tighten it too tight. So using 4180 as my intermediate or near term support level. 450 will be my key medium term pivotal support. That means what it means that as long as 450 is not surpassed on the downside, that means there's no 4-hour close below 4050, 4050, I will still maintain that multi-week bullish bias on the SPX 500. That means we're talking about the weekly view or the multi-week view, all right? So as long as 4050 holds, I'm still expecting a slow move up or slow churning up to actually make new potential all-time high on the SPX 500 with the first resistance at 4280/4300, then thereafter followed by 4330, followed by 4360 level. All right. Now moving on next to the Nasdaq 100. Okay, so Nasdaq 100 on the daily chart. So on the daily chart, what's positive is that yes, we still have the 4040 upside trigger level that refused to surpass. So what's 4040? A quick recap is my Q2 outlook upper neutrality limit. That means in my Q2 outlook, I'm saying that I have a neutral bias on the Nasdaq 100, where I expect it to actually go sideways below 4040. Okay, so for that means we're talking about for a multi-week perspective, at most, right, if I have a bullish bias, it should be maximum 4040, unless we have a weekly close above 4040, that we could actually validate a further potential up move for now. So what's positive so far, right, ever since the test of 4040, that means there's no weekly close above 4040. Yeah. So the one that is tested the highest was on 29th April at 4077, but no weekly close above it. All right. Then thereafter it start to come down and it's churn push up back up again above the 50-day moving average. So what's positive is that it start to shape a series of higher low. This low higher than this low higher than this low, and this swing low higher than this low, or taking shape above this ascending trend line support that is in place since 21st of Sep 2020 low. So pretty positive in terms of kind of buy the dips mentality seems to have starts to surface in the Nasdaq 100 index. So definitely for sure I will use 13,420 as my key medium term pivotal support for this week. So pretty much unchanged, 13,420 which I have for last week as well. So I maintain this 13,420. So as long as it didn't have a 4-hour close below 13,420, I'm still expecting a kind of a push up to at least test this upper neutrality limit of my Q2 outlook, which is 14,040 on the Nasdaq 100. So at most, I look for a potential push up to 4040 level, unless we have a weekly close by the end of this week at 4040, then we could validate a further potential up move next week. All right. Now moving on to the Hang Seng Index. So Hang Seng Index, right, pretty much unchanged this sideways. So last week, right, intend to do a push up, but failed to actually break above the swing high area of 12th of March and 18th of March. So what we could see over here is that since 18th of Feb, which is the post, uh, I would say that this is the end of the Chinese Lunar New Year break, where the Hong Kong index starts to actually underperform. Okay, this is actually more in line with the China rhetoric towards the China big tech companies, and as well as Chinese key officials have started to sound the alarm of a prior strong up move on the China stock market bull run that takes shape in Q3 Q4 last year and spill over to the early part of this year. So they sounded a bit of alarm and sounded a bit of hawkish, saying that they kind of give a bit of warning towards a stock bubble that is forming in the China stock market as well as the global stock market. So definitely Hong Kong will be hit because the Hang Seng Index has a couple of main revenue generator, or I would say that some China big cap stocks that actually component stock of the Hong Kong 50 index, which is the Hang Seng Index. But if you look at from a technical picture, right, it's still trying to form a potential double bottom that has been taking shape since 25th of March low and 13th of May low. All right, this is a kind of a potential down bottom with the neckline resisted at 29,575. So what we want to do over here is that we want to have at least a 4-hour close above 29,575 to actually validate or to be more comfortable to validate a further push up towards 30,140, which is the 76% Fibo retracement of 18th Feb high to 25th March low, and as well as the 1.382 Fibo expansion, taking from the low of 25th of March to the high of 28th of April, projected to 13th of May. Okay, then thereafter we should break above 30,140, which will take us up to the swing high area of 30,070 slash 31,080, which is the swing high area of 18th of Feb 2021, close to it, give or take. All right, so still have that bullish bias, but it's equal to have at least a 4-hour close above 29,575 to be more to actually to have to skew the probability towards the bullish bias, okay, to for this bullish breakout of this double bottom. So if it can't break above 29,575, more or less it will be more like a sideways formation again for this week on the Hong Kong 50. Okay, now the next Asia indices, or the next major indices I want to share, which is now shaping a potential up move after a kind of a failure breakdown from that symmetrical triangle failure bearish breakdown, is the Nikkei 225 or the Japan 225. Okay, still recall that over here is that yes, everybody is pretty scared about this symmetrical triangle bearish breakdown, but where it stopped, right, it actually stopped right at the 200-day moving average, and as well as close to the 23.6% Fibo retracement taken from the low of 16th of March to the 16th of February 2021 high. This is close to a 31 high for the Nikkei 225 or the Japan 225. So it stopped a kind of a very significant support level that is being determined by different technical elements. All right. So what we could see is that, and the way it reacted off of it, it started to form a bullish dragonfly doji, then thereafter a very strong Marabuzu candlestick after that. So if you look at these three candlestick, 1, 2, 3, this could be a daily morning star reversal, which is a kind of very significant potential bullish reversal sentiment in terms of sentiment wise from bearish to bullish. Okay, pretty significant. So what it did over here is that after this formation of this daily bullish reversal morning star candlestick pattern, it start to reintegrate back above the symmetrical triangle upper limit, lower limit. Okay, it reintegrate back above, and now trying to actually test this descending range, which is the symmetrical triangle range, resistance at 29,600. All right, so but RSI has already start to do a bullish, potential bullish pre-signal. So notice that this descending line on the RSI is actually equivalent in parallel with the descending resistance that I draw on the price action connecting the lower highs. All right, it's the parallel resistance. So what it means that the RSI starts to shape a bullish breakout first. So momentum, that means RSI is a momentum indicator. It measures rate of change. As you know, that rate of change is always a leading, it has leading property over pure price action. That means it leads ahead of price action. That means, i.e., what it means that over here is that upside momentum has started to build up. Potentially, it could actually shape a potential bullish breakup as well. In terms of odds wise, has started to increase for the Nikkei 225 or the Japan 225. Okay, so what I have over here is pretty much unchanged for the Nikkei 225 or the Japan 225 for this week's strategy. Still having this 28,300 as my key medium-term pivotal support, using 28835 as my intermediate support level, looking for a push up in first step towards 29,600. If we could have a 4-hour close above 29,600, we could reinforce a further potential up move towards the next resistance at 13,280, which is the former swing high area of 25th of Feb, 18th of March, and as well as 6th of April, and also the top of this minor ascending channel resistance that is in place or has is now started to evolve since 13th of May 2021. All right, but however, if you have a 4-hour close below 28,300, then we could see another slide below to retest the 13th of May swing low at 27,500. Okay, now moving on to the German 30 index. So German 30 index, a pretty strong move last week. So what we could see is it shaped a new all-time high, breaking above our first resistance level, which is 15,580. So where it printed a high of 15,708, closed at 15,699. Okay, so it's have a kind of a slow churn up higher towards above the 50-day moving average. All right, so what we could do over here is still no change, no signs of a bullish exhaustion yet on this German 30 index, no clear signs. So what we could have is that we still maintain the bullish bias. So right now is that I will actually tighten the key medium-term pivotal support from 15,000 towards 15,090 level. So what's 15,090? 15,090 is actually this swing low of 19th of May, and also close to the low of this ascending channel support. The ascending channel was at 15,200, which is the minor ascending channel support in place since 1st of Feb 2021 low. All right. So last week it has a breakout above the 15,050-80 resistance level. So I'll use this 15,050-80 level as an intermediate support level, looking for a further potential push up towards the next resistance at 16,070/16,200, which is defined by a cluster of Fibo expansion level as well. All right, so this will be the next resistance level to watch on the German 30 index. So overall, pretty much unchanged for the medium-term outlook or the or the multi-week outlook for the major stock indices that I covered earlier, still maintaining that bullish bias. Okay, so with that, have a great trading week ahead, and I see you all next in my next video.